My friends, what is going on? So starting out today, let's talk. Earlier at market close today, once again, guys, if you don't already know, I've been dealing with COVID. Uh, Man, stuff sucks. Don't wish it on anybody. Uh, been feeling real low energy, so just haven't been tweeting as much lately, or honestly having the energy to chart as much lately. But yesterday, last night, I was tweeting to my buddy Trey, square root of nine, and I told him, I said, a really low volume push down to $20.50 would be just, chef's kiss. Um, and honestly, I still believe that. However, what I was hoping for is honestly, I was hoping that was going to play out pretty early in the day. I was hoping we were going to kind of have an open morning flush down to that range so we could have gotten that spring early, and then we could have started to see the rebound throughout later in the day, moving back or up towards that max pain area. And unfortunately, that didn't happen. Yeah, it didn't happen until early in the day. Actually, the reverse happened. The market sort of opened up semi hot. Some plays were running, and then you know, I don't know. I'll be honest. I was not following close enough. I don't know if it was inflation talks or whatever, but or the whole market being scared of just an overall correction with interest rate hikes or anything along those lines. But it just the entire market. I mean, basically everything. That I watch, track, GameStop, Tesla, Apple, all those. I mean, it's just, it was red and a big down day across the board. I mean, the only thing that's green on my phone is the VIX. And so, I mean, that just tells you about there wasn't any place out there today, I guess, unless you were, buying puts or anything like that. But like I said, overall, it was just an awful day in the market altogether. So we finished up the day at that $20.66 range. We actually dipped lower than that at one point. But overall, my mentality is the same. That I'm not leaving the play or anything along those lines. So then, about 40 minutes ago, I tweeted out, the chart looks ugly right now. I think everybody should mentally prepare themselves for the teens, which I still believe. And I said I would make a video as to why. So that's what I'm going to do. So let's jump into the charts. So basically, looking at the overall chart for AMC. There is a couple of trend lines that we've been tracking. I've already talked a lot about this one that runs from the all-time highs, where we were kind of making what looked like and was hopeful we were going to make this, reverse head and shoulders right here. Unfortunately, that didn't come to fruition. We broke down out of that. And so, one trend line, was potentially looking at was going to be this one right here from the bottom of the June run, which, as you can see, it acted as resistance back here, and then that led to the springboard. And as of today, we are definitely down below that one at this point in time. Yesterday, let me go in here a little bit shorter time frame. Yesterday, I talked about kind of the pennant that we were making, and I said one way or the other, we're either going to see a big move down or a big move up, and we saw the big move down, unfortunately. So now we're getting into this territory of new lows from the June run. So previously, when we had that spring, that was at $20.89, and then we came down here to $20.80. And now we were here where today, it's $20.52, and I said $20.50, so I was 2 cents off. Forgive me. But anyway, now we're looking at, okay, now we've made another low. So we are making lower lows, and that's not good. That's why I tweeted out right now the chart for AMC looks ugly. We aren't making any higher highs, and we are making lower lows. So right now we are in a downtrend that we need to break. So my next big level of support is going to be from the top of the wave one run in January, which was at that $20.37. Unfortunately, it pretty much just left us on kind of a cliffhanger today, where it was, if we would have had that push down early in the morning, like I had talked about, then we could have seen how the market was going to react and how bulls with the buying pressure was going to look like, what the volume was going to look like at this level. But unfortunately, we didn't. So it didn't happen until the end of the day. And so now we're waiting until tomorrow, which obviously traditionally Fridays usually aren't great for AMC. Fridays just aren't great as a whole because, a lot of, Max Payne pinning goes on, things of that nature. Which, by the way, Max Payne is at $23 tomorrow. So if we saw a 10% move back up to the upside to around the $23 range, that wouldn't surprise me at all. That would make me feel really good. Honestly, obviously, what would make me feel best is if we saw a big reaction to this move here tomorrow. We saw somewhere in the 70 to 100 million volume range with a push back towards the upside. Then that would really kind of give us this, double, triple bottom that potentially, we are going to be seeing the effects that we want to see. But other than that, once again, taking some looks at the fib levels. So the Fibonacci retracements, love them or hate them, they are incredibly accurate. I mean, you can just stare at this one right here and see how much all these different lines have always been respected by AMC, throughout this June run. So drawing it from the bottom of the June run to where we are right now, I'm going to take that off. We have just, broken below as of today. We're fighting around this golden pocket area, and unfortunately we broke down. So the 786, which always on the the shorter time frames, we always talk about and kid about how AMC loves the 786 retracements, and so that would bring us down to right around $17.69. Which, honestly, if we got that low, I would just assume to fill that gap, that's down to about the $16.38 area, and then start to, move big time back upwards. That would be, and that way it's just, behind us. We don't have to worry about it anymore. And we can just, look towards the upside. So if we got that low, I would just assume do that, to be honest with you. Another area or fib that we can draw from is going to be from the buy button collapse, that happened, back here coming up on the year anniversary of that. And if we do that, then we've got the 0.5 retracement, which is going to be at $19.65. That could also be a strong possibility, which would also be just below wave one. I know I've talked a lot about the Elliott wave theory and the 1, 2, 3, 4, 5 wave, and once again, I still believe in that. There are scenarios where I talked about how in general the rule is wave 4 can't break down into wave 1. So if you look at this as wave 1 was January, then wave 2, then wave 3 was the June run up. Now we're in the corrective wave 4. So wave 4 generally doesn't cross over into wave 1 territory. It can briefly, like if we wick down or anything along those lines, then that wouldn't be considered invalidated. But we definitely don't want to spend a ton of time, down here in the teens area. So once again, the buy button collapse, the 0.5 is 1965. The golden pocket would be in the $14 area and everything along those lines. Once again, I still don't see quite that low as possibility. The reality is they're eventually going to pull this down to the point where everybody is going to start, buying back in. Like it or not, we just did not, in my opinion, still see a bunch of retail buying pressure, up in that $30 and $40 and $50 range. I think it will pull back to a point where some of the original January or February apes, or even previous to that. I very first bought into AMC even before I was knew about the ape movement or anything along those lines. I mean, I originally bought AMC back here just above the all-time low. I bought it at $2.25. I would have to go by and back and check. And I'm not going to sugarcoat it. Once again, I didn't know about apes or anything along those lines. I sold when I bought back here in the $2 range. And then I sold up here in January the 27th when they took the buy button away and everything along those lines, because I was just a trader at that point in time, and then I didn't buy back in honestly up here until it was like June 18th, because I thought we might be able to keep squeezing here, and I've been buying and holding ever since, and I will continue to do so, and I will continue to average in. I mean, I made a ton of money on this run right here, and so I've got a lot of dry powder. If we start coming back into this territory, I'm only going to keep buying more. So so these are going to be the different Fibonacci ranges. We can also look at from the absolute low. The 382 and the 618 are the two most common Fibonacci retracements. So that 382 comes in at $18. So there are still a lot, even if we start retracing more, there are still a lot of supports that we have coming up that, in my opinion, we'll be able to bank on, that are going to act as a lot of support. I will be buying at all of these support levels because that's what I believe in. I believe in buying on support levels. So right now, if you look at the exponential moving averages, all the EMAs, we are trading below all of them. Like I've been saying a bunch of times, we are going to have to start, recapturing and seeing some good, solid, positive movement back towards these to really be able to gain any type of momentum in this play. But other than that, so these lows that happen, even if you take out, okay, I'm going to kind of exclude what happened here at the buy button collapse, but the March 4th lows, then it was respected on April 13th, and then it was respected again on May the 6th. So if I draw that trend line going up, hitting all of these touch points, once again, like I've said before, I think some things are going to happen before March, but these would take us all the way down into kind of that 1850 range once again. So, like I said, preparing for the teens at this point in time, I think is a wise, and both, mentally, emotionally, however you want to look at it. Because the reality is, guys, is I'm not here to be, your cheerleader or anything along those lines. Like, I'm going to call things like I see it, and I'm not going to sugarcoat things, and I'm not going to lie to you. When I think this chart looks ugly, I'm going to say this chart looks ugly, and it is brown bag ugly right now. I mean, you don't even want to look at it with how ugly it looks right now. So I'm not going to just tell you, just close your eyes and hope and click your heels together 3 times and you'll be back at home or anything like that. Like I said, I'm not here to be, a cheerleader. I'm only going to say what I feel like I can back up and show or prove what's going on in the charts. I'm hoping by this weekend I'll feel well enough and the brain fog is gone enough that I can really dive into some fractals and kind of, see where we're at. But once again, like I've done before, just quickly kind of pulling the bars pattern, where we are right now is looking very similar to where we were, starting around kind of the June, let's see, about 25th range. So, like I said, AMC loves playing out, it's repeating fractals. So, this type of move where we just kind of grind out of here, towards the end of January up into, beginning of February, or excuse me, up until about middle of February, that wouldn't surprise me at all. So, you look at the options chain and everything along those lines, they are going to, in my opinion, pin this as low as they possibly can, before leading up to these January 21st, options that we've got going on. So, at the end of the day, once again, prepare yourself for the worst. That's the way I approach things, is I try to prepare myself for the worst. I expect the best. I hope for the best, but I prepare myself for the worst always. And so, like I said, I'm not going anywhere. Even if you took everything, squeezing off the table, for AMC, I'm still a huge believer just in movie theaters. A ton of my most fond memories as a kiddo all happened in movie theaters, and I cherish the movie theater and the movie going experience. I did it with my parents. I do it with my kids to this day. So that's a big reason. I believe in theaters. I believe in the theatrical experience, and that's why I'm going to keep buying and holding. And because I only think it's going to be getting better. I think movies are going to be getting bigger. I don't believe they're going anywhere. So, like I said, but all that matters is, do you believe in AMC and do you believe in the play? And if the answer is yes, man, we'll sit back and we'll laugh about this one day. And if the answer is no, then it's best for you to move on and do something else. But as you guys know, nothing I ever say is financial advice. I'm going to be buying at the support levels that I talked about, all the way down. I'm going to be averaging down. But like I said, I'm a long-term investor either way. So all I've got is time. And I truly believe, I don't invest in anything that I don't believe in. And I believe that my investment is going to pay off in the end. I hope you guys feel the same way. Much love. I'll see you out there soon. And go make it. Be all right. If you believe it, I believe it. But you got to believe it. It's going to be all right. I'll see you soon.